Breaking this morning, Iran and Israel have agreed to halt attacks against each other. Trump confirmed both sides are seeking an immediate ceasefire and that final negotiations are moving forward. Gold is dropping, oil is falling, and every investor is asking the same question right now. Is this the beginning of the end of the war premium in every asset? Or is this another false dawn, like the 3 ceasefire announcements that collapsed before it? Today, we answer that question with real data and real scenarios. Welcome to Financial News Daily. Welcome to Financial News Daily, your trusted source for global financial updates. Today is Tuesday, June 9th, 2026. 3 things we cover. 1. What exactly happened with the Iran-Israel ceasefire overnight? 2. How every major asset is reacting right now. 3. 2 scenarios for the rest of June and exactly where to position your money in each one. Let's move. Welcome to Financial News Daily, your trusted source for global financial updates. Today is Tuesday, June 9th, 2026. 3 things we cover. 1. What exactly happened with the Iran-Israel ceasefire overnight? 2. How every major asset is reacting right now. 3. 2 scenarios for the rest of June and exactly where to position your money in each one. Let's move. Here is exactly what happened in the last 24 hours. Monday, Israel agreed to halt strikes on Iran at U.S. President Trump's request. But crucially, Israel vowed to continue heavy bombing in Lebanon. Tehran paused operations against Israel while warning against any strikes on southern Lebanon. Trump called for an immediate ceasefire. Both sides appeared to respond. This morning, Tuesday, June 9th, gold is trading at $4,330, down from Monday's $4,459 open, down $229 in less than 48 hours. Markets are pricing in partial ceasefire optimism. But here is what every investor must understand about this development. This is the 4th time in 2026 that markets have priced in ceasefire hope. April 8th, a 2-week ceasefire was announced. Gold rallied to $4,790. Then the ceasefire broke down. Gold reversed. The pattern is clear. Ceasefire announcement, gold drops. Ceasefire collapses, gold spikes back. The critical difference this time: Trump is personally involved in the final negotiations. Both Iran and Israel have paused operations simultaneously, for the first time since February. This is more credible than before. But the Lebanon situation remains a major wildcard. Israel continues heavy bombing in Lebanon. Hezbollah has not agreed to anything, and Iran has warned against any strikes on southern Lebanon. One Israeli strike in southern Lebanon could collapse this entire framework within hours before evacuation. The ceasefire is real, but fragile. Position accordingly. Every major asset. Tuesday, June 9th. Gold. Monday high, $4,559. Tuesday current, $4,330. Down $229 in 48 hours. But the floor held. Gold hit $4,268 Monday, lowest since March 23, then recovered to $4,343. That bounce off $4,268 matters. Buyers defended that level. Today's pivot point, $4,266, already above it. Bulls holding. CBS analyst Ned's floor call: I can't see gold breaking below $4,400 with conviction. Current price testing that statement. Oil. Ceasefire pushing Brent toward $85 to $88. Every $5 drop in oil removes 0.1% from U.S. inflation. Watch this number closely. Fed rate hike probability. Now at 40% for December, up from 14% 1 month ago. A confirmed ceasefire holding through CPI could push that back below 30%. That single shift would be the most bullish signal for stocks in weeks. Tuesday verdict. Gold under pressure but floor holding. Oil easing. Inflation relief incoming.
Everything hinges on whether this ceasefire survives the next 48 hours.
2 scenarios, clean and direct. Scenario 1, ceasefire holds. Oil falls to $80 to $85. War premium deflates. Inflation drops from 3.8 toward 3.2 to 3.4% over 60 to 90 days. Fed rate hike probability falls below 20%. December cut comes back into play. Gold pressure toward $4,000 to $4,200, but central bank buying, China added 8 tons in April alone, sets a structural floor. Recovery toward $4,600 to $4,800 by year-end as rate cut hopes return. Stocks, strong rally. Airlines, consumer, hospitality lead. Defense pulls back modestly. Bonds, first real opportunity to buy long duration since 2022. Scenario 2, ceasefire collapses. Oil spikes back above $95 to $100. Every collapse adds $8 to $12 to oil within 48 hours. Inflation stays above 3.8%. CPI Wednesday shows no improvement. Fed rate hike probability jumps to 65%. December hike near certain. Gold snaps back to $4,500 to $4,600. War premium fully restored. Stocks down 3 to 5%. Double pressure. Oil shock plus rate hike. Honest probability right now. Ceasefire holds 45%. Ceasefire collapses 55%. Why 55% for collapse? Israel has not stopped bombing Lebanon. Hezbollah agreed to nothing. Iran has a red line on southern Lebanon. One Israeli strike there, everything reverses within hours. One rule above all others this week: do not make dramatic changes before Wednesday's CPI. You need 2 data points, not 1, to act with conviction. CPI plus ceasefire status together. Here is the 4-outcome matrix. Ceasefire holds plus CPI cool. Reduce gold to 25%. Buy long bonds. Add consumer stocks. First real portfolio rotation since January. Ceasefire holds plus CPI hot. Hold current allocation. Rate hike still possible despite peace. Gold floor at $4,200 holds. Ceasefire collapses plus CPI hot. Increase gold to 40 to 45%. Defense and energy only for stocks. Cash to 15%. Avoid long bonds. Ceasefire collapses plus CPI cool. Hold current allocation. 2 forces cancel each other. Wait for June 16-17 FOMC for clarity. The framework in 1 sentence. CPI tells you the rate story. Iran tells you the war story. You need both before you act.